can't tell you how many times I've talked to a small business owner who talks in the vanity metric that is revenue to try to tell people how good their business is. And then I get into the books and I see that the business barely makes money or sometimes doesn't make money at all. Obviously, we want high revenue. That's how business works. You want people to pay you, but a business isn't necessarily judged by its level of revenue. A lot of times, a business that does $500,000 in revenue can be a 10 times better business that does $5 million in revenue if their cost of delivering their product is much more expensive. So when companies try to scale, a lot of times they just think in terms of revenue, but sometimes a better way to grow your business and get you ready for true scale is to make everything efficient in how the business works. Look at your revenue, and then if you have cost of goods sold or cost of sales type thing, you want that margin to be as high as possible. And then you look at what's below that line and get rid of business expenses that aren't necessary. Look at labor that you're paying. Think if there's a better way to do it. There are all these things. Like if you're a business that makes $1 million in revenue and you don't make money, like if there's not 100 grand left over for the owner at the end of the year, it's a terrible business, or at least it's on its way. It's got work to do to become a good business. So don't let the vanity metric of revenue make you think you're doing better than you are. It's all relative to what nets out and how it benefits you as the owner. Now, if your business model is to add revenue and then, scale until you hit this equilibrium of where there's net income for you in the business, that's great. But a lot of times, you just see people chasing revenue and it could be an agency, for example, and they're taking on new clients, getting new revenue. But as they add that revenue, they just pay new contractors the exact same amount that they're getting to do it. There's really no angle or business model there unless your idea is that you'll be spending less time in the future with new clients. So be thinking about it. If you're constantly driving revenue in your business, you're doing $1 million in sales, $2 million in sales, and at the end of the year, you're just thinking, I don't have anything left and it doesn't feel like a good business. Probably not yet. It needs some tweaks. So those are some things to look out for.